We're halfway through the year, and the San Diego housing market is showing some very clear trends. Inventory continues to rise, demand is steady but not explosive, and there's now a notable difference between how detached and attached homes are performing. In this video, I'll walk you through all the key data from the month of May and give you a breakdown of what I'm seeing out in the field, current to this month, and what it means for you if you're thinking about buying or selling a home this year. I'm J.R. St. Julien with the St. Julien Real Estate Group of eXp Realty, and welcome to my San Diego housing market update for June 2025. Let's get to it. The Federal Reserve met earlier this month and decided to hold the Fed funds rate steady as expected. But post-meeting, it's becoming clear that pressure is mounting for the Fed to cut rates sooner rather than later, as multiple Fed governors have expressed that opinion publicly after Jerome Powell's decision to hold rates steady was announced. But Powell continues to reaffirm that he's in a wait-and-see period, waiting to see and observe how tariffs will impact inflation, as it's still uncertain what the final tariff policies will be and how they'll impact the economy. As for mortgage rates, they've remained fairly steady in the high sixes, with the current average 30-year fixed mortgage rate sitting at 6.81%. The 10-year Treasury bond yields, which mortgage rates often track, have also been fairly steady, fluctuating between 4.25% and 4.6% over the last couple of months. This steady range is keeping both buyers and sellers that are waiting for a drop in rates in a bit of a holding pattern, especially those that are waiting on a clear signal from the Fed. And unfortunately, it's looking like anyone that's waiting for interest rates to significantly drop will be waiting for quite a bit longer. Now, let's talk about what's been happening out there in the market. If you're paying attention, you probably noticed a shift. New listings are basically flat compared to April. No big surge, no big drop, which is interesting news. Pending sales, they're actually up 3.8%, showing a slight rebound in buyer demand for the month of May. Closed sales, those dipped by 7.1%, which isn't too surprising given some of the economic uncertainty and previous slower months of buyer demand. And the median sales price has ticked up by $1,000 to $920,000. Nothing dramatic, but it's holding steady. Average days on market are still at 32 days, just like last month. And inventory, that's where things are really moving. We're up 8.6% in available homes between the month of April and the month of May. And then of course, months of supply, that crept up again as well, from 2.9 months in the month of April to 3.2 months in the month of May. So in short, supply is climbing and demand is hanging in there. We do have some sign that maybe that increase in supply is slowing down, since the new listings were pretty much flat from April to May. So I don't think this is a runaway buyer's market yet, but buyers definitely have more choices and more opportunities than we've seen in many years in this current market. Okay, so now let's switch to a 30,000 foot view and look at year-over-year activity. And as we break down the stats, we'll take a look at the differences that are becoming more clear in the detached home market and the attached home market, as those two markets appear to be diverging quickly. Okay, let's look at sales activity. Detached homes saw a 6.9% drop in closed sales year over year, while attached homes dropped more sharply at 14%. Pending sales followed the same trend, down 3.7% for detached and down 9% for attached. In the inventory realm, detached home inventory rose by 25.6% year over year, but attached homes, that number jumped by 49.8%, nearly double year over year. Now, detached homes saw the median price move up 0.9% to $1.1 million, and attached homes increased 1.1%, now sitting at $690,000. Days on market, detached homes are now sitting 11.1% longer on the market than this time last year. And for the attached homes, that wait has stretched out to 37% longer. And for months of supply, this is where the contrast is crystal clear if you haven't seen it in the previous stats. Detached homes are now at 2.9 months of supply, which is up 20.8% year over year, and attached homes have ballooned up to 3.7 months of supply, which is up 48% year over year. I don't even remember the last time we had 3.7 months of supply in general throughout the San Diego County market. So in short, detached homes are still relatively balanced while the attached home market is clearly shifting. Both markets are still showing price resilience, but if inventory continues to grow without an equivalent growth in demand, pricing pressure would definitely increase, and I would expect to see more of an impact on the attached homes due to the higher inventory versus demand ratio imbalance. That being said, we did see a slowdown in new listings, so maybe we might see a little backing down off of the growth of inventory. But regardless, if you're buying a condo or townhome, right now you have more leverage. And if you're selling one, you want to make sure your selling strategy is sharp, your presentation to the market is on point, and your pricing strategy is well informed to make sure that your home isn't a dud on the market. Now, a lot of key takeaways here. For buyers, inventory is growing. You have more options than we've seen in the past 3 years. Detached versus attached matters. Condos and townhomes are seeing more inventory and longer days on market, which creates room for more negotiation in the condo and townhome space. Rates, they've been steady and they've been kind of holding. So with 30-year rates hovering around 6.8%, you got to just plan your financing around that number because we're not seeing as much volatility as we saw in 2023. And then for sellers, you got to be strategic. We're not in the market of a year ago. We're not in the market of a few years ago. So you got to price your home right and present your home well in the current market. That's just critical. You also want to make sure you understand your segment, your neighborhood segment, but more specifically, the type of home segment. Detached homes are holding better than attached homes, but even there, buyers are more selective. Attached property owners should consider pricing more aggressively than what a detached property owner would price. And lastly, expect competition as inventory continues to grow. You'll need to stand out with staging, marketing, and pricing. Again, presentation matters. Now, that wraps up my San Diego housing market update for June 2025. If you found this helpful, please hit that subscribe button and share this with anyone who's thinking about a home purchase or selling a home in the San Diego market right now. And if you're ready to make that move or just want to talk strategy about your particular situation, I love to connect and I would love to help you out. Give me a call or book a time on my calendar using the link in the description below. I'm JR St. Julien with the St. Julien Real Estate Group of eXp Realty. Thanks for taking the time to watch my San Diego housing market update for June 2025. I'll see you in the next one. Take care.